Hello, welcome to this presentation. I want to walk you through uh, one of your homework problem. That's question 14 of chapter 19. So here we've been given an example of an investor who has bought a condominium and the market value is 235,000 and the assessment rate is 80%. So again, from what we know, the 80%. So if you're looking at the tax base, right? If you're looking at the tax base, is basically 80% of the market value, which is 235,000. And therefore, in this example, the tax is going to be based on $188,000. We have also been given what the investor is looking for in terms of return, which is a 10% return per month. And we've been given the tax rate, which is $32 per each $1,000. And other expenses are general repair and insurance, which is $250 per month. And we've been given the condominium fee, which is again $120 per month. And the other utilities we've been told are going to be paid by the tenant. And so we've been asked to calculate the monthly rent. So how much the investor needs to charge for this property. So what we need to do is, what the question is really asking us is to determine all the expenses, again, all the monthly expenses, and then we just do a markup of 10%. That'll be the return above the expenses, and that will be solving what the monthly rent will be. So, of course, this is coming from chapter 14. So, we're going to address the issue to do with the tax. So, the tax on this property, and because the tax is $32.50 per $1,000, so we can determine the tax amount per year. So we know that the tax base, the tax rate, the tax amount is based, the tax is based on $188,000. And we know that our tax rate is $32.50, but for each $1,000, right? For each $1,000, we are charging $32.50. So this is what we mean by for each $1,000. So now here we have a total of 188 times 3250, and this gives us a value of 6,110. So this is the tax. Again, this is the tax per year. So if you're looking at the tax per month, because all the other figures are given per month, they are the expenses. So we could have converted the tax per year to tax per month. And again, we just assume this is straight line, right? It's going to be equal each month. So you'll take the yearly tax amount and divide this with the 12 months. And this will give you a monthly tax of 509 and 17 cents. So this is our tax per month. And then we just have to add the other expenses so that we have a total expenses. So we are going to add there the general repair and insurance to the 509, and this is $250. Then we also add the condominium fee, which is $120 per month. So in terms of the total expenses is 509 plus 250 plus 120, and we have a total of $879 and 17 cents. So this is the total expenses the investor will be incurring on a monthly basis. But remember, the goal of the investor is to get a 10% return, right? So in other words, then you're going to charge the tenant more than just $879. So in terms of the monthly rent, you're going to take the total expenses and you mark them up by 10%. So you can find the 10% of 879.17 and then add it to the 879.17. So simply what we do is you just take 1.10 times 879, and this will give you a monthly uh, rental fee. What you have to charge is 879.08. So this is what the monthly rent need to be in order, again, to cover the expenses at the same time to realize a 10% return on this property. So I hope this information is helpful, and let me know if you have any other questions.